Hello dear students. Today we are going to see the types of accounts and rules of accounting. As we have already seen the business transactions. Okay, and there are different types of transactions which we have to record in the books of account. For recording these transactions, first of all you have to know what are the different types of accounts that we are going to see in this video. See, there are three types of accounts: personal account, real account and nominal account. One by one we are going to see these accounts with the example. Personal account. Personal account are the accounts which classify again into three parts, that is natural persons, artificial personal and representative personal. Okay. Personal account represent the person's account, firm's account or company account. That's why they are classified into natural person account, artificial personal account and representative personal account. Natural person account are the accounts which deals with individual persons. Okay, for example, Ramesh account, Mahesh account. That are the example of natural persons account. Then artificial personal accounts are the accounts which deals with the artificial persons or legal bodies created by the law or others. For example, firm's name account, agriculture college account. Then another type of personal account is representative personal account. Representative personal accounts are indirectly representing the persons or persons. All accounts regarding the financial transactions related to outstanding expenses and prepaid incomes are represented as a representative personal account. For example, outstanding expenses and prepaid income accounts are outstanding salary account, prepaid rent account, prepaid commission account, interest due but not receive account, rent due but not receive accounts are the example of representative personal account. Another type of account is a real account. Real accounts are refers to an account recording the financial transactions of the business related to the assets. Okay, real accounts are the accounts of assets. There are two types of assets: tangible assets and intangible assets. Tangible assets refers to an account relating to an assets which can be touched, felt and measured. For example, building, machinery, goods, furniture are the example of tangible assets. And intangible assets are the assets which cannot be touched and measured physically, but they are the assets. For example, trademark, goodwill, patent, copyright are the example of intangible assets. Clear? Real accounts are the accounts which are related to the assets, that we call it as a real account. Another type of account is nominal account. Nominal accounts record the transactions of the business which are connected with expenses, income, losses and gain. Okay, all the transactions which are related to expenses, losses, income, gain, we treat as a nominal accounts. Okay, the example of nominal account is rent account, salary account, commission account. Now we are going to see what is the rule of accounting. It is also called as golden rule of accounting. Personal account is an account of persons or firm's name, which we have already seen in previous slides. Then what is the rule of recording this personal account? Rule of personal account is debit the receiver and credit the giver. Always we have to think from company point of view or business point of view, and taking into consideration business, we have to record the transactions. What is the personal account rule? Personal account rule is debit the receiver, credit the giver. From the company point of view or business point of view, if he is a receiver, then we record that account on debit side. If he is a giver, then we record that account on credit side. That is the rule of personal account: debit the receiver, credit the giver. Then real account. Real accounts are the accounts related to assets. Okay. What is the rule of real account? Debit what comes in and credit what goes out. From company point of view, if the assets are coming into the business, then we record on debit side. If assets are going out of the business, then we record on the credit side. Then nominal account. Nominal accounts are accounts related to expenses, income, losses and gain. What is the rule? That is debit all expenses and losses, credit all income and gain. From company point of view, if there are expenses or losses, then we record on debit side. And if there is income and gain, then we record on the credit side. This is golden rule of accounting. Based on this rule, we are going to record each and every transactions in a journal. Here are some of the example in which we are going to see the how to record the transactions in the journal. That journal part we are going to cover in coming videos, but here I am going to explain how to apply the rule. This is the salary paid first transactions. In this transaction, first step is we have to identify which two accounts involved in that transaction. Salary is paid in cash, that's why salary account and cash account. These two accounts are involved in that transaction. First step is to identify which accounts are involved. That is salary account and cash account. Now, second step is we have to apply the rule. Okay. Before applying the rule, we have to identify which type of account it is. There are three types of account: personal account, real account, nominal account. Salary account is a type of nominal account. Nominal accounts are account related to income, losses, gain, and expenses account. That's why salary is expenses. That's why salary is a nominal account. Then cash account. Cash is a type of real asset, current assets. That's why assets related account are treated as a real account. That's why we have identify which type of account it is. Salary is a nominal account. Cash is a real account. Now we are going to apply the rule. See, nominal account and real account. What is the rule of nominal account? Debit all expenses and losses. As the salary is a expenses, that's why we record salary account on debit side. Debit all expenses and losses. Then cash account is a type of asset or real account. Okay, and what is the rule of real account? Credit what goes out. For paying the salary, cash is going out of the business. That's why cash account is credited. Okay, clear? First example. Second is interest received. In these transactions, two accounts are involved: cash and interest. Cash is a type of real account. Interest is a type of nominal account. Here interest received means cash is coming into the business. That's why debit what comes in the rule of real account. We record cash account on debit side. Then interest is the income because interest received. That's why it is income. And credit all income and gain rule of the nominal account. We record interest account on credit side. Another example is machinery purchase. Okay, machinery purchase. In these transactions, again two accounts are involved: machinery account and cash account. Machinery and cash both are the real accounts. In this example, machinery purchase means machinery is coming into the business. Against that machinery, cash is going out of the business. That's why we record debit. We record machinery account on debit side and cash account on credit side. That is debit what comes in, credit what goes out. Building sold. Here also two accounts are involved: cash and building. Both are real account. Applying the real account rule, debit what comes in and credit what goes out. We record the transaction of building sold. Then outstanding salary. Here two accounts are involved, that is salary account and outstanding salary. Salary account is a nominal account. Outstanding salary is the personal account. In personal account, we have seen there are three types, that is natural persons, artificial person, and representative personal. Outstanding salary is a representative personal account. Okay, by applying that rule, salary is expenses. That's why we record salary account on debit side. Outstanding salary is the personal account. By applying the personal account rule, outstanding salary is credit the giver. Then receive cash from Ramesh. Okay, here two accounts are involved, that is cash account and Ramesh account. Cash is a type of real account. Ramesh is a type of personal account. What is the rule of real account? Debit what comes in. Cash is coming into the business because cash received from the Ramesh. That's why cash account is debited. Here Ramesh is a giver of the cash. That's why Ramesh account is credited. Capital introduce. Capital, here also two accounts involved: cash account and capital account. Cash account is a type of real account. Capital account is a type of personal account. Here cash is coming into the business because capital is introduced. That's why cash account is debited. And capital account is a personal account. Here capital is introduced means proprietor is introducing the cash. That's why it is giver Applying the personal account rule, capital account is credited. Dividend received. Here also two accounts involved, that is cash account and dividend account. Cash is a real account, dividend is a nominal account. Here dividend received means that is income. Okay. What is a nominal rule account? Credit all income and gain. And what is a real account rule? Debit what comes in. That's why cash account is debited, dividend account is credited. Commission paid. Here two accounts, commission account and cash account. Commission paid means that is expenses. Expenses means nominal account. Rule of nominal account is debit all expenses and losses. Cash account is a real account. Here commission paid means cash is going out of the business. That's why cash account is credited. Thank you.